Bismillahirrahmanirrahim. So today we are going to start the second lecture of audit, that is advantages of an audit. So the first one, it is general advantages for all organizations. Then we will discuss advantages for sole business, advantages for partnership, and advantages for LLCs, limited liability companies. So what are the general advantages of audit for all organizations? The first advantage is, as the audit is independent review of internal systems and the report on them, and to report on them, it is helpful in finding out the weaknesses to be corrected. Keep in mind one thing, auditor is not only checking the financial system, but he is also checking the operations of the business. So at the end of his audit, he is writing his opinion. In his opinion, if he wants to give some advice to the company on making their operations effective and efficient, so he is writing it in that opinion. So if there are some weaknesses, the company, the business can easily correct these weaknesses. So it is an independent review of the internal control system. So the auditor can advise you, the auditor gives his opinion how to make your internal system of control more effective and efficient. They will pinpoint the weaknesses of the firm, and it will be helpful for the firm to remove these weaknesses. The second thing is, during the audit, the auditor provides advice on the basis of his expertise and experience, as when accounts and control systems are to be introduced or extended. They also gives you opinion that if the company needs more accounts, you know about accounts, and some control systems, so they can guide you about these. They are advising you about all these things. Like on the basis of the auditor, keep in mind, he has a huge amount of experience. So on the basis of his experience, he can guide you if some accounts are to be introduced in the business, and if the company needs some control systems. What are control systems? Later on when it will come, then we will discuss about this. It is basically part of internal control, are to be introduced or extended. The presence of an auditor will minimize the attempts at fraud and make their success less likely. Now keep in mind, if the employees know that an auditor will come at the end of the year, so there will be a very less chance of fraud. But if there is no audit, then the chance of fraud, it will be very high. The probability of fraud, it will be very high. But if auditor comes, he will check all these things. He can identify if there is some fraud in the business. Errors and fraud, here again he is talking about fraud, but the main focus here will be errors are likely to be discovered more quickly. If auditors come, so the chance of errors, it will be less likely. Keep in mind, all companies, they are also keeping internal auditors. So internal auditors can also guide the company on all these things. So these are the advantages of audit, general advantages for all the organizations. Now, what are the advantages of audit for sole business or sole traded? Audited accounts are given more weight by banks and other which are approached to provide finance. Suppose you need money. This is your business and you need finance. You need money. You are contacting a bank. This is a bank. Just a minute. Okay. This is a bank. Now, the company is contacting the bank that provide us loan. So company will say, first, show me your financial statements, balance sheet, income statement, cash flow statement, and all these. They will check their financial statements. But if these financial statements are audited, there is auditor sign and stamp. They will give more credibility. They will trust it. But if these financial statements are not audited, bank will not give. They will be they will not trust your financial statements. So audited financial statements, banks and other financial institutions, they will give it more weightage. But if these financial statements are not audited, maybe you made some frauds in that, like in your profitability or your assets and liabilities. Maybe you made wrong information, maybe to misguide, to deceive the financer, you provide some wrong information. But if these are audited, bank will give more credibility. Okay, what is the problem? The second thing, a prospective customer, purchaser of a business will have more confidence in audited accounts as evidence of past profitability. Now, if someone wants to purchase your business, there is a person who wants to purchase your business. So if your financial statements are audited, so this shows that this shows the past of your business, that it was good or it was bad, and he will trust it easily. But if these financial statements are not audited, so maybe you will provide wrong information to this person to sell your business, and when he will purchase your business, he will find another picture. So if financial statements are audited, so those people who want to purchase your business, they will give more weight to the financial statements. Audited accounts are likely to have more credibility. If the accounts are audited, so these will be more credible. These will be more, what you can see, people will trust it. The government will trust it. Another thing is the chance of fraud and error. It will also be minimized. I will add it. Number D. Chance of error and fraud will be minimized. Okay. So these are the advantages of audit for a sole business. The second is advantages of audit for partnership business. The interests of a sleeping partner will be protected. Suppose there is a business, partnership business, And in that partnership business, there are three partners: partner A, partner B, and partner C. Partner A, he is managing the business. He is actively involved in the affairs of the business. But B and C, they just provide the capital. So these type of partners are called sleeping partners. So if there is audit, so these sleeping partners, this B and C, they can trust the financial statements. But if these financial statements are not audited, they will not trust it. So their interests will not be secured. Here he's telling you about this thing, that the interests of sleeping partners will be protected if there is an audit. Dispute among partners over such matters as profit sharing may be less likely to arise when accounts have been audited. So if there is some dispute among the partners on profitability, so that thing can be reduced. The chance of that issue will be reduced if the accounts are audited. And if they do arise, their effect may be minimized. If something happens, if some issue arises among the partners, so you can easily minimize it, as auditors are independent, whom all partners trust. They will audit all the things, and since this auditor, he is an independent person, he is an outsider, so all the partners will trust him. So the chance of dispute, it will be minimized. The next thing is the financial arrangements on the admission of a new partner, retirement, etc. are more soundly based if the accounts themselves are known to be reliable. Suppose if a new partner is going to enter into this partnership, partner D. So if the accounts are audited, he will check the financial statement, he will check the balance sheet, he will check the profit and loss, he will check the cash flow. If all these are audited, so he can easily invest his money in this business on the basis of these financial statements, and he can claim his share of profit in this business. So see, what is he saying? The financial arrangements on the admission of a new partner, or if a partner is going to retire. So if a partner is going to retire, he will claim his share. So if the accounts are audited, we can easily give him his share. Are more soundly based if the accounts themselves are known to be reliable. So these are the advantages of audit for partnership. The third one is advantages of audit for LLCs, limited liability companies. Access to capital market. Keep in mind, if you want to access the capital market, you know about capital market, where long-term securities are bought and sold. Stock exchange, you can see. So it is a requirement of the Securities and Exchange Commission that you must audit your accounts once a year. If the accounts are not audited, you can't access to the capital market. Public limited companies must satisfy audit requirements under the Securities and Exchange Commission in order to register securities and to have them traded in the securities market. Without audits, companies would be denied access to these capital markets. Now see, if you want to start a company, joint stock company, joint stock company, first you will register this company with Securities Exchange Commission. After the approval of Securities Exchange Commission, this joint stock company can issue shares to the public. Then there are some requirements. This is public, suppose. This is one of the requirement of Securities Exchange Commission on this joint stock company, that there must be an audit once a year. They will show audited statements. Now, these shares will be traded on the stock exchange. You know what stock exchange, where shares are bought and sold. This is stock exchange. If you will not audit your financial statements, your company, if there is no audit, so keep in mind this joint stock company can't trade their shares in the stock exchange. So for trading on the stock exchange, on the capital markets, it is must that there must be an audit once a year. Lower cost of capital, another important thing. Take an example. One of your friend, he's coming to you. This is you. This is your friend. He's coming to you and he's telling you that give me 10 lakh Afghanis. Will you give 10 lakh Afghanis to him? Yes or no? No. Majority of you will say, yes, he is my friend, so I will give him. No, you will not give him until you know about his financial position. If you know about his financial position, that he is on a good job, he has property, you will give him loan. But if you know that he is, in Pashto we call it Tashpane, so you will not give. You will not give money. Same is the case in financial institutions. This is company. Company is going to take loan. Our company company wants to issue bond. Their financial position is weak. Nobody will purchase the shares of this company. Nobody will purchase the bonds of this company. If they will purchase, they will charge high rate of interest. High interest rate. Why? You know that it is risky to give him money. So if I am taking risk, high risk, so he will give me high return. Suppose there is a sound company, financially strong company. So if that financially strong company issues bond, so they will offer you 8% interest. You will purchase. Why? You know that their financial position is good. But if a company whose financial position is weak, when they offer bonds, they can't offer it at 8%. Why? Nobody will purchase it. So if they offer you 14%, then people will purchase. Why? Interest rate is high. They will purchase the bonds of this company. Why 14%? Their financial position is weak. So the chance of loss to them will be high. So then, investors who are risk takers, they will purchase bonds of this company on 14%. See, there is a big difference, 8 and 14%. This company is a risky company and this company is a sound company. So if, and the most important thing, if their financial statements are audited, so then people will trust. Now this company, their financial statements are audited, they are issuing bonds at 8%, people will purchase, people will trust. And they can raise capital at low interest rate. But if a company whose financial position is weak, they can raise funds at high interest rates. Lower cost of capital because of the reduced information risk associated with audited financial statements. Another thing. Suppose one of your friend, he came after 10 years, he met you and he's telling you that give me 10 lakh. You don't know what he's doing. So if you will give him 10 lakh, risk is high because you don't know him. But this man, you know him. He is very close to you. You will give him loan. Why? The risk is low here and the risk is high here because you met him after 10 years. You don't know, you don't have much information about this man, but this man, you know him closely, you know about each and everything about him. So here the risk is low and here the risk is high. Now take another example. This company and this company. This company, their financial statements are not audited, and this company, their financial statements are audited. So in this company the risk is low and in this company the risk is high. If risk is low, so this company can issue bonds at 8%, and this company, their financial statements are not audited. First, you will not trust. If you will trust and this company is issuing bond, so the interest rate will be high. It will be 14%, 13%, or 16%. Why? The risk is high here. Here the risk is low. So if the risk is low, you can raise capital at low cost of capital. But if risk is high, the companies will take capital on high cost. Cost of capital means the cost on which you are raising capital. Creditors may offer lower interest rates. Creditors means those people who are giving you loan, and investors may be willing to accept a lower rate of return on their investment. And if this company is issuing shares, the risk is low, so there will be low rate of return. They will accept it. But in this company, risk is high. They will accept it, but they will demand high rate of return. Deterrent to inefficiency and fraud. Another advantage of audit. When employees know that an independent audit is to be made, they take care to make fewer errors. They know that auditors will come, so they will find out. So when they are doing work, they will focus, they will be focused. So the chance of errors, it will be less in performing the accounting function, and are less likely to misappropriate companies' assets, and they will not misuse the properties of the business. That is another advantage, that the chance of fraud will be less, and the chance of misuse of assets, it will be less. The fourth advantage of audit is control and operational improvements. The independent auditor can often make suggestions to improve controls. I have told you about internal controls, how to improve the effectiveness and efficiency of the business better, and achieve greater operating efficiencies within the client's organization. Means I told you that after the audit, auditor is giving his opinion. So he is giving you advices in his opinion for making your operations effective and efficient. So this is the last advantage of audit for LLC. If you have some questions, so you can ask, then I will explain. If something you didn't understand, so then you can ask questions on LMS, so then inshallah I will answer these questions. I will check that what is the length of